like once I understood Bitcoin, I would go to bed with anxiety at night feeling short because I worried that somebody else would figure out what I'd figured out and they would buy it all and I wouldn't be able to buy anymore. And so once you get something and you look out decade or decades, the only issue is, how do I buy more of it?
Yeah, there should be some risk management around this thing, should there not? Or it's just because buy and hold is not, Michael, that's not something, that's something that companies and executives have been trying to sell me their stock for 20 years have been telling me to do. And I'm just not willing to buy into that.
Well, I didn't buy it to make money in 7 days. I bought it to hold for 30 years.
Yeah,
so why don't you come back to me in 30 years and call me an idiot at that point in time? And it all comes down to time horizon. You're thinking about 12 months. And by the way, Keith, in 12 months, you're probably going to beat me on every single trade. I'm an idiot when it comes to figuring it out in 12 months. In 10 years, I think I'll probably be right. But I made the trade because when I looked out 30 years, all the noise dropped away. And I said, over 30 years, I don't want to be holding government bonds. I don't want to hold corporate debt. I don't want to hold a bunch of big tech equities that are already highly appreciated. I don't want to own gold. I can't figure out what to buy. And I found this thing. And I think it's just extraordinary that we even have the opportunity to buy it at this point in time, because 10 years ago you couldn't.
If you believe in it, why don't you understand it so that you don't buy it at a bad price? There's nothing.
If you believed in it, you wouldn't sell it.
Michael Saylor destroys Keith Mcullough in a Bitcoin debate. In this video, Michael Saylor goes head-to-head against Keith Mcullough, founder and CEO of Hedgeye Risk Management, over Bitcoin as an investment and its risk profile compared to other assets. If you have friends or family that don't understand why Bitcoin is the most powerful investment of our time, show them this video. Make sure to stick around to the end of the video where we go over some recent on-chain Bitcoin data that suggests where the Bitcoin price is heading short term. If you are a Bitcoin investor or thinking of becoming one, you'll want to see this. Also, only a tiny percentage of my viewers are actually subscribed. If you enjoy the video, consider subscribing. It's free and you can always change your mind. Enjoy the video.
I'm not going to sit there and just romanticize and not understand that the dollar, the other side of the trade, which it's replacing, doesn't have a huge immediate and intermediate term impact on the price of the thing you're buying.
Okay, so Keith, I have a comment on Quad 4. First of all, there's a group of people in the world that you trade with that believe that inflation is equal to CPI and therefore you can define a Quad 4. There's a group of people that I align with, the Bitcoiners, that believe that the true inflation rate is not CPI, but rather it's the asset inflation rate. It's the rate at which the long bond or the T-bill or equities have been moving up for the past decade, or the expansion of the monetary supply. So if you focus on inflation as CPI, it's 1% or less. If you would focus on inflation as the monetary supply expansion, it's 15%. And I actually think that the inflation rate for the past decade is 20%. If you look at the cost of a 10-year bond that yields $50,000 a year in interest, it went from $1 million to $10 million in 10 years. That's 22% inflation. So there are different, over the near term, if you're trading with people that buy into your CPI definition as inflation, then that works. But if you're looking over the long term and you're trading with people that actually buy into the asset inflation rate as the inflation rate, you come to a different conclusion.
Well,
my last point is, in the near term, Keith, in the near term, these things work. But over the long term, adoption makes sense. Like all of your arguments about why you should short Facebook in 2013, they're all wrong. Facebook's trading at $280 a share. They're all wrong. You should have never sold it ever, ever, ever. Now, what happens to all these wonderful models if 10 billionaires decide to buy $1 billion of Bitcoin each and announce we bought it, we're not ashamed of it, we're going to buy more? All your models are destroyed, completely devastated. Bitcoin goes to the moon, because what really matters is, with Facebook, does it work? Do 1 billion people use it? With Apple, do they buy it? With Google, do they use it? With Bitcoin, will they use it? All the near-term trading models, they'll work for 90 days, 30 days, whatever, as long as everybody else in your trading universe sees the world you see it. But over a decade, over 20 years, over 30 years, the laws of thermodynamics are going to kick into place. And it's pretty obvious. Bitcoin is a better long-term asset than gold or corn futures or soybeans or any company run by a CEO, no matter how august and intelligent they are. They're all just merely mortal. And Bitcoin is something better than that.
It sounds like it. I have no quibbles about that. The more you talk, the more I like that story. I mean, it's not, and again, it's not, we can't, if you want, you can reduce me to just being a trader. I don't think you're trying to do that. But the reality is that it's not about the level of inflation. Never has been, Michael. It's about the rate of change of a price basket of things that are inflating. And that's absolutely what Quad 4 is. Sometimes it's deflating, sometimes it's inflating. You'd have to be a certified idiot to say that oil at a negative oil price, which it was in Q2, which impacted, again, the price of Bitcoin was hostage to Quad 4. This is obeying the laws of thermodynamics. It is the secret to the universe. It is calculus. It's rate of change. So again, I think, and it would be great that if Bitcoin bulls who have the long-term story nailed down would just cede that point. The rates of change, it's not unlike the weather. The rates of change of growth and inflation absolutely impact the price of Bitcoin. And if people knew that, you'd have more people, less concerned or worried about buying Bitcoin because they'd have the confidence to buy it during a hurricane. A hurricane or Quad 4 conditions is when you have disinflation. So I don't know how somebody would refute that. Can you?
Well, Keith, once I understood Bitcoin, I would go to bed with anxiety at night feeling short because I worried that somebody else would figure out what I'd figured out and they would buy it all and I wouldn't be able to buy anymore. And so once you get something and you look out decade or decades, the only issue is, how do I buy more of it?
Yeah.
That's all we're thinking.
So you should be going to bed at night feeling great about the next Quad 4 is what I'm saying. Why is it so hard to just say that? This is just, we're using math. We're not using, narratives here. We're talking about, if you understand that the rates of change of economic gravity, we're talking 101 thermodynamics here, that you don't have to have those anxieties. I have zero feelings about Bitcoin. Zero. And I'm happy about that. That's what I want to store my wealth in. But I want to do it.
Keith, you got to own something, man. At the end of the day, you got a family, you got a company, you got a future. Look out 30 years and try to figure out what you love. Wine, you're going to own that. What's your passion? What is it that you're going to own, that you're going to hold? I would buy into the notion that maybe when, if you got a model and it says Bitcoin is cheap or it's better or whatever, buy more of it. I just think the danger is selling a good thing. I'm not very good at selling my things, Keith. I'm good at buying. Once you find something that you love, you should hold it, because if you sell it to buy it cheaper, then you're betting that other people that have this short-term model are going to act however they're going to act. And you might be right, but you might be wrong. And at the end of the day, if you're buying something that you expect to go up by a factor of 100, then selling it or buying it this year is going to be plus or minus. If you bought Apple stock at $2.25 versus $2.10, it seemed like a big difference back then. But what if you made the mistake and you were short the share and you missed the next $100 run up? I mean, that's the danger of near-term trading. So
yeah, and the opportunity. I don't think this is a debate about trading. If we want to reduce this to you guys are traders and we're the ones who get the long term, that's fine. I've been reduced to I know nothing about long term about anything, including my own company, my own family, my life. I'm just going to get up every morning and do the best I can to understand it and put a risk management wrap around this. If it's truly an asset allocation that one should hold over the period that you're talking about, forever, there should be some risk management around this thing, should there not? Or it's just because buy and hold is not, Michael, that's something that companies and executives have been trying to sell me their stock for 20 years have been telling me to do. And I'm just not willing to buy into that.
So there's Michael Saylor taking Peter McCullough to school on Bitcoin. In my opinion, Michael Saylor wins the interview, but let me know in the comments. Now, Michael Saylor explains why the richest people in the world became rich by buying and holding the apex asset of their time and why you should never sell Bitcoin. But before that, a quick thank you to today's video sponsor, TrustSwap. You may remember TrustSwap from 3 weeks ago when we first covered it on the channel, but since then it has gone from $3 to over $4 and is pushing into the top 150 coins and is a definite dark horse of the crypto scene. Swap is a very hot coin at the moment and for good reason. If you are into your smaller crypto projects, you need to take a look at TrustSwap. First, what is TrustSwap for those that don't know? TrustSwap is a full-service digital asset ecosystem. There's 4 main tenets of TrustSwap: staking, smart lock, smart swap, and launchpad. So first, let's talk about what I think is the most interesting and successful aspect of Swap, the launchpad. The TrustSwap Launchpad is your ticket for early access to the best new crypto DeFi tokens in the space. So, the best way to explain what Launchpad is, it is essentially a venture capital pooling fund that gives you priority access to startup crypto projects. Through the TrustSwap Launchpad, by staking Swap, you get guaranteed access, and the more Swap you stake, the larger allocation of the project you receive. Pretty cool, right? For those of you, like myself, that come from equity investing and equity markets, this is essentially getting ground floor access to companies or projects before they IPO, but in this case, the cryptocurrency version. Now, TrustSwap isn't the only launchpad on the market, but what sets them apart and why Swap is so hot right now, running up the coin market list, is because of the success that the projects they have done through their launchpad. Check this out. Mobile Pay has done an 18x since launch, Yield App a 15x, and Real Chain Games a 9x, and the list goes on. So clearly some huge success from the projects that they have taken on in the past on their launchpad, and this is the reason why Swap is so hot right now. The TrustSwap team vet projects before taking them on through the launchpad and only try to bring the best to the community, and clearly they have been very successful in the past. So, how the launchpad works: if you stake 4,000 Swap, you get a guaranteed launchpad allocation of the project. If you stake 7,000 Swap, you get a 2x bonus on launchpad allocations. And for each launchpad process, you have a 12-hour window to choose to participate if you want to. So, a very interesting project, definitely worth keeping an eye on if you are into your smaller cryptocurrencies and your moonshot crypto projects, as they have clearly been hugely successful in choosing some good ones in the past. We'll definitely be checking in on TrustSwap again in the future, but for now, back to Michael Saylor putting the final nail in the coffin of this debate, explaining how long to hold Bitcoin and why it is the apex asset. Make sure to stick around to the end of the video where we go over some recent on-chain Bitcoin data.
It seems to me like every billionaire on the planet got there by buying and holding something, Keith. I mean, tell that to Rupert Murdoch or Warren Buffett or Jeff Bezos or Sergey Brin or Mark Zuckerberg.
What does that mean? Like not everybody's going to be a bit like, I'm not a billionaire, but I'm certainly not worth $1 million. I did that. You're talking to a guy that understands. I built my company 13 years ago and I bought and hold it. I get it. I totally get it, but I would not.
So why would you tell the average person that they ought to trade everything 1,000x?
I didn't say that.
It's a lot of work. It's very complicated.
I actually didn't say that. I said that.
The tax code is very hostile to that.
I didn't say that at all. Actually, what I said was, if you believe in Bitcoin like I do, I bought the living daylights out of that in April and May. If you believe in it, why don't you understand it so that you don't buy it at a bad price? There's nothing.
If you believed in it, you wouldn't sell it.
Yeah, that's fine. I mean, I don't have to believe in it the way that you do, but I'm trying to say that there is a better way to buy it. And in a level of awareness on that, I still haven't heard why economic gravity does not affect Bitcoin.
Okay, so my point here is that if you're a professional trader and that's what you do, or if you spend 10, 20, 30 hours a week and you devote the effort to it, and if you've got all the offsetting positions and you can manage the tax issue and you've got all the platforms, then maybe you can do something there. The average person doesn't have the time, the wherewithal to do it, and the tax code is hostile to moving in and out of positions. I mean, one of the most intelligent things you can do is just buy something and wait for 10, 20, 30 years because all your gains accrue tax deferred. And so telling the average person, like I can't go tell my father, I want you to go and study up 20 hours a week on trading strategies and take 50 different offsetting positions every year. What I can do is say, Dad, buy a bar of gold, put it under your mattress. And that's what he would have done 30 years ago. Now we have a better idea. You can buy a bar of Bitcoin and you can put it in your hard self-custody wallet and you'll have it and no one can take it away from you. It's a investment strategy someone can execute.
Yeah, 100%. I agree with that 100%. I mean, what I'm trying to articulate is the very basic concept of a drawdown of your capital. So again, you can buy it at 19,000. Or you can buy it at a much lower price when Quad 4 hits. And I mean a much lower price. We're talking about significant drawdowns. It's not like you can everyone can pile into it at today's price and has that duration, Michael. I mean, especially if we're talking about the billionaire who's going to be dead in like 10 years, he might think about, okay, maybe this is something I should risk manage.
Well, there's the dollar cost averaging observation that if you continually sweep your excess cash flows into an investment portfolio that's going to be a hedge against true asset inflation, then that's a wise and rational strategy for a mere mortal.
Yeah.
I don't think it's for a company or for an individual. I think sweeping your excess cash flows into a basket of treasury assets that are going to appreciate in price as the monetary system expands is rational. And if you try to time that, maybe Bitcoin is trading at 19,000, so you don't do it, so you wait for it to come back. And then maybe it never comes back and it goes to 100,000, and then you lose 5x your money. And your money gets inflated away to nothing because you were trying to be cute. And so when I make an investment, I know there's a 50% chance that I'll be wrong in the next 12 months. Like we bought some Bitcoin, it traded down. What did we do? We bought more Bitcoin. And then people they all get all worked up over it. 7 days after you did this trade, you didn't make some money. Well, I didn't buy it to make money in 7 days. I bought it to hold for 30 years.
Yeah,
so why don't you come back to me in 30 years and call me an idiot at that point in time? And it all comes down to time horizon. You're thinking about 12 months. And by the way, Keith, in 12 months, you're probably going to beat me on every single trade. I'm an idiot when it comes to figuring it out in 12 months. In 10 years, I think I'll probably be right. But I made the trade because when I looked out 30 years, all the noise dropped away. And I said, over 30 years, I don't want to be holding government bonds. I don't want to hold corporate debt. I don't want to hold a bunch of big tech equities that are already highly appreciated. I don't want to own gold. I can't figure out what to buy. And I found this thing. And I think it's just extraordinary that we even have the opportunity to buy it at this point in time, because 10 years ago you couldn't.
So there you have it, a heated Bitcoin debate between Michael Saylor and Peter McCullough. Let me know who you thought had the stronger points in the comments. Personally, I think Michael Saylor took him to school, but as a crypto YouTube channel, my view is obviously pretty biased. Now, for some recent on-chain Bitcoin data that suggests where the Bitcoin price is likely to go from here, we have some on-chain data out from Glassnode regarding Bitcoin movement and at what price level and volume has been moved. So what we can see from this recent data is that even with Bitcoin moving into all-time highs, over 245,000 Bitcoin have been moved at prices above $62.7 thousand. This creates already a huge level of support that we can use to move to the next leg up, so in the near term it's looking very bullish for higher prices coming soon. Max Kaiser tweeted out a short-term $77,000 price target is now in play. Let's hope he is as correct as he has been in the past. Anyway guys, hope you enjoyed today's video. If you made it to the end, consider dropping a like on the video, it helps out the channel a lot. I'll see you in the next video, and as always, have a great day.